Welcome back to the channel where technical analysis is simplified. My name is Michael. I hope you're feeling healthy and well. Now in this video here, I have something special for you and something that you probably haven't seen anywhere else. What I'm going to share with you is actually an indicator that's going to let us know when the market's declining, if it's a bullish decline or a bearish decline. Now that might seem counterintuitive. How could a market falling actually be a bullish signal? Well, that's what this indicator here is going to show you. Now it is very simple in nature, but don't let the simplicity throw you off because often it's the simple things that do work best and most people do overlook. I'm going to show you a few examples of how it's worked in the past and exactly what I'm looking out for moving forward. Now it is something you can add to your chart. You can use it on any market. I'm going to be using Bitcoin, but it is something that's very worthwhile keeping an eye on, especially for some bigger picture analysis. So without further ado, let's just get stuck into it. This video is for education and entertainment purposes only because I'm not a financial advisor. Always do your own due diligence and your own research before making any financial decision. Make sure you check those links out in the description below. You can sign up for our free newsletter where we cover cryptocurrency, but also real estate and the economic cycle. Also, you can get yourself some free money and giveaways using those special links in the description below for those exchanges you can see listed there. And also I do reference a TIA Gann swing indicator throughout all of my videos. It's my most used trading tool. I use it for basically every single one of my trading decisions. So you can also find that link in the description below. So as I've been sharing with everyone on the channel, pretty much a day or so after the low did come in, I was getting very bullish from that point, looking at the possibility of it being the actual cycle low. Now, while it remains to be seen, because we want to be seeing some macro breakouts and some big picture confirmation to confirm a big picture low, there's every chance that it could be the low. But even so, if we start to dip down and we do break it, I don't see the market going much past around $17,500 for Bitcoin. We could see some wicks below it, but I just don't see any long-term sustainable moves below that point. But of course, I'll have to stand corrected if and when the time comes. But one indicator I am looking out for to give me some kind of indication if the market is actually going to be going up from this point, and if we do start to decline, what's an early warning indication that maybe we're on for a bigger decline, is using the average true range. Now to find that indicator, simply hit the indicators, type average true range. You can see it pop up there, and that's going to be giving you this line down on the bottom of the screen. Now I've just changed those settings for you so there's a little bit more contrast, just made it white and a bit thicker. But essentially what the average true range does, it just averages out the size of the bars over a given number of periods. I've got 14 set to this. I am on the daily chart, and essentially it's just giving me a reading as to what the volatility is doing. Is there more activity in the market? Are the ranges of the bars getting bigger, or are they getting smaller, and then it averages them out? So the reason why that's important is because when the market does tend to die down and consolidate and accumulate, there's less interest in the market. People are losing interest. They're kind of stepping away to look at something else at exactly the wrong time, when typically that's the time to be accumulating, as the smart money does, in preparation for the next move. So when we do start to see this line, this average true range line go down, typically that's just meaning there's less interest in the market. But when we couple that with a bit of price action as well, it can give us some valuable insights, which is what I'm going to be showing you with this big picture view using a bit of history on Bitcoin as the example. So what we can see in accumulation patterns is the market obviously going sideways, not putting any massive moves, just kind of churning around up and down. But in those periods, it's important to see this particular indicator start to trend downwards. It's a bit hard to see, but just trust me, that line is pointing downwards from high down to low. And if we can get the price stability in that time, that next breakdown, while the market was dying down in volatility and just kind of hanging out sideways, that is often a very good signal of some kind of accumulation taking place. Now, I've circled a bunch of examples here so that you can see, but once again, we do have the situation all the way back in December of 2019 into January of 2020, where the market was consolidating, going sideways, and the average true range was still declining in that time. That next breakout did lead to a rather significant pump in the price. Now, I'm also on the log scale, so that's why the chart, is going to reflect the price in terms of a logarithmic scale as opposed to a linear scale. But nevertheless, we go to the next example where we did get that COVID crash low. The market did consolidate and go sideways. There was no big correction in that time, but in fact, we did see interest die off as the average true range did also decline in that time. And it just happens time and again. The market did pump from that point. Then we get another period of the market declining in price, but of course, the average true range was also still declining at that time. Now, as you can see, it is just a matter of rinse and repeat. Market consolidating, average true range going down. That next breakdown does lead to a rather rapid price acceleration. Now, the warning sign, when we do start to see the price fall and the average true range go up, if you just think about what that means in terms of price action, we've got falling prices, we've got more activity. It's just showing there's fear in the market. That's exactly what we got from that top all the way back in April of last year. We had the price declining, but the average true range going up this time. So that's a big danger sign for the market. And that's something I want to be pointing out with what's potentially coming up, or at least what we need to be looking out for to confirm this decline. If we do get a decline as just a normal correction and an actually bullish move, or in fact fear selling, in which we can anticipate further downward pressure from that price. But before we get to that, we'll look at a couple more examples just so we can really hammer it home. But after we did get that low that took place in June of last year, once again, we did get the price falling, but this time the average true range wasn't going up, it was actually declining at the same time. So we get the market churning, going down, average true range also going down, people losing interest, looking the other way, and of course that next breakout led to a rapid price acceleration. And then after we go to the all-time high, we can see from that point forward, when we did get these declines in the market, we also had increases in the average true range, showing there was more fear in the market and there were genuine sell-offs. It happened over and over again throughout this entire bear market so far. We get drops in the market, and we get pickups in the average true range. Fear is rising on these sell-offs. So now with that little bit of background knowledge, looking at a few examples, we can look at the current market action and try and piece together what we think is coming up and what the indication is going to be. So in fact, if we do continue to see the decline in the market, but we also see the average true range also drop off, that is going to be an extremely bullish signal because there's not fear in the sell-off. It's just a healthy, normal correction after the market has been up for a couple of months. But on the other hand, of course, if we do see a correction, wherever that does come in, maybe we haven't seen the intermediate top yet or not, maybe we have, but if we do, whenever we do start to see that price decline, if we see a pickup in the average true range, meaning there's more activity, that will be signaling a sign of fear in the market, and then perhaps there's going to be a larger decline from that point forward. So it is a very simple indicator to be keeping on top of. I've touched on it on the channel a couple of times. I also talk about it with the members over at the Investor Accelerator. So it is something I will be keeping an eye on in terms of what the price action does next, to give somewhat of a leading indicator as to what the next decline is going to be, or at least whether we are going to be seeing a breakdown from this particular low, or if it is going to be holding up and it's just a healthy correction before the market gets set to move. One thing to keep in mind is I am looking at the very big picture here. So although the market is kind of grinding up at the moment, going sideways, we can see that these periods can last for many, many months. We have this situation here, it was about 4 or 5 months of the market churning around, a few months once again. So we have been up for a couple of months, but it is kind of a big picture signal to be looking out for, to confirm a big signal low or invalidate a big signal low. But to bring it all together, essentially I'm using the average true range as a bit of a volatility reading. So when that average true range does go up, obviously the bar sizes are getting bigger and more people are active buying and selling. And when that average true range is declining, obviously there's less people around because the price range of the bars are getting smaller and smaller. And it's when I couple the average true range, that volatility reading, with the price action as well, is what gives the valuable insights. It's when we see both the average true range going down and also the price going down, it's showing there's not a lot of volatility in the decline, and perhaps there's not a lot of fear in that decline, and it can be a bullish signal. Whereas if we see that average true range go up and the price falling, that means the price of the bars are getting larger as the price is declining and there is more fear in the market. So while it's not a perfect indicator and nothing works all of the time, we can definitely get some really valuable insights as to the direction of the market and either validate or invalidate what kind of decline we're looking at, a bearish decline or maybe just a correction. So that's a wrap on the average true range and how we can use it with some price action to give us an indication as to whether the market falling is in fact a good fall and a healthy correction, or something that is a little bit more fearful and in fact going to signal further declines. As usual, if you did enjoy this video, you know what to do with those buttons down below, and until next time, I'll catch you then.